Good morning, namaste everyone. And today we are back with the fourth session of Beyond Classroom season 14. Okay, and this season will have 9 amazing sessions. And today is the fourth session, which is all about your personal finance. And today, a very good friend of ours, Upinder Jain from Hyderabad, who is doing phenomenal business as far as his own business is concerned, and he's going to take us through how we can actually use SIPs, STP, and systematic withdrawal plan, rolling returns, how we can actually use all these tools and influence our investors, how we can actually create, how we can do the financial planning on a single page, what are the other asset classes which we are using. So let's see how he is doing his practice, how amazingly things are working for him. And that's really going to help each one of us, I'm sure. So let's move forward. So over to you, Upinder. Looking forward to learn from you.
Hello, can you hear me, sir?
Yes.
Hello, good evening, everyone. Can you hear me? Yeah. Sorry, I had to travel to Bombay, so a little video issues.
Absolutely,
everyone.
Yes, audible, loud and clear, bro.
Thank you. Thank you. So once again, good evening to everyone. Kanak sir, please give me screen sharing. So can you all see my screen?
Yes, visible.
Good evening, everyone. I'm Upinder Jain. I'm sure Kanak sir has given my introduction. I was a bit delayed due to connection issues. So welcome everyone. So today's topic, what I'm going to take is on SIP tools, and SIP with annual increase. So can we go ahead? So friends, there are only two ways of making money. One, which is very, very clear, that is either you do a job, you work. Is this sound echoing, please? Can someone confirm it?
Yeah, it's echoing.
Is it clear, sir, now?
It's clear at my end.
It's completely clear, sir.
Okay, so I'll go ahead. So thanks everyone for waiting. So basically, there are two ways of making money. One, that is you work for money, which is your business income. And the second, what you invest, and investments which give you returns. So there are only two ways of making money in the markets. Now, having said that, we're talking today about the investment. So just give me a minute. Let me log in once again. There's a issue. The screen is not moving. Just give me a second.
Since he is for example, the time that there is joining back, I will just share with you few things. Yes, Opinder is there.
Yeah. Thank you. Sir, can you give me permission to share the screen? Yes. So sorry for this technical glitch. Here we are talking about investments, SIP tools with SIP annual increase. So I was mentioning there are only two ways of making money. One is the source of funds, which is basically you earn money or someone does a job, and that's how you make money. And the second is how you invest this money, how you invest this money, and how returns are generated by this money, which gives you additional money. And that is all about financial planning. तो संक्षिप्त में ये है कि एक आप जो पैसा खुद कमाते हो बिजनेस करके या आप जॉब करके, वो एक इनकम हो गई, और एक आप उस फंड्स को जो आपके पास आते हैं उसको कैसे यूटिलाइज करते हो. दिस इज ऑल अबाउट फाइनेंशियल प्लानिंग. इससे बढ़कर कोई फाइनेंशियल प्लानिंग नहीं है. बट हैविंग सेड दैट कि हम इन्वेस्टमेंट्स करते ही क्यों हैं. तो इन्वेस्टमेंट्स आदमी इसलिए करता है, वन फॉर सेफ्टी द मनी विच इज यू आर जनरेटिंग, second for growth of capital, next income from investments where you create a pipeline of income for these from these investments, tax minimization is also in a way where you minimize the taxation and increase your network, increase your wealth. And last but not the least, before investment, you also need to understand what is the marketability and liquidity of each investment which you're making. Because if you're making an investment into asset classes which does not have marketability and liquidity, it is as good as losing money. So now, friends, let's make it more interactive. What do you think is the biggest enemy of your investment or of your money, your capital? Can anyone answer or write it in the chat?
Inflation and taxes.
Okay, inflation and taxes. Anything else? Okay.
Contingency.
Contingency, inflation, yes, someone said inflation. Inflation is nothing but taxation without legislation. And next, as someone said, so I'll just give you an example of inflation, how it impacts our money. When we talk about inflation, impact on our money is today what is 50,000 rupees? Like last session, which was taken by our DG, he also mentioned that the cost of living is only one coin, which was around 2,000 years.
Voice not clear, sir.
Is it not clear, sir? Because I am only on instrument and
Voice is echoing.
okay. Let me just recheck it once again. Give me a second.
The problem is there are few participants who have kept their mics open, so the voice is echoing because of that reason.
Yeah, I think that is also there. Kanak sir, can you just mute everyone except me? And now if my voice is, I think now my voice is definitely not echoing. And can someone just type and confirm this?
Yeah,
Yes, now it is better.
perfectly fine.
Yeah, thank you. Thank you, Kanak ji. Thank you so much. So now last, if you see the value of money, this is, I'm giving you an example of inflation. So if you talk about at least a 6% inflation, which is there in the economy today, amount of 50,000 rupees, which is there, if your expenses are similar over a period of say 5, 10, 15, 20, and 25 years, you can see on the screen what is the amount you need for buying the same set of products and services. So today's 50,000 over a period of 25 years goes to 2.14 lakhs. And similarly, if the money is not put to use and it is lying idle in your safe or bank, the power purchasing of this money goes down. So a lakh of rupees over a period of 25 years, if it is not invested in a proper asset class, which beats inflation. The whole point is, the subject point is an asset class which beats the inflation. You would still, your power purchasing comes down to almost 1/4, a little lesser than 1/4, which is around 23,300 rupees. So this is about inflation. And the next is, yes, as couple of us have said, it is taxes. Taxes are one of those things which eat away your money, definitely. But again, taxes are not that bad, or not bad also, because again, for an economy to run, you need taxes. The government spending is to be there, and it has got certain other effects on the larger macro part of the economy. Now, most of it, if you see, not just these two, one major important point which is there is a major behavioral attribute which hinders your investments, which hinders your wealth creation over a period of time. And what is that? Delaying the decision to invest. Am I right in this? Yes, friends. Now, when we are talking about delaying the decision to invest, by what happens with this delaying? I'll show you this with an example. So the whole point is, take the action now. That is what it is. So let me share an example with you. Can everyone see the screen? Can everyone see my screen, sir? Great. So this is just an example I'm showing, wherein I've taken my own example. So these are my goals: property, to buy a house, for my kids' education, marriage, and my own retirement. I have to do this over a period of years. If you see here, 3 years, 5 years, 13 years, 20 years, and 20 years. So this is what the total corpus I would need. Having said that, this is an SIP of 7.45 lakh rupees is needed to me to invest over a period of the said years to attain my goal. But just see the magic, or see what happens if you delay your investments by 1 month. If you delay your investments by 1 month, your shortfall in the goal is by 75.84 lakhs. Just a 1 month delay, 7 lakhs to 75 lakhs. It is more 10 times by delaying your investment by 1 month. Are you with me on this, guys? Right. So the whole point is, what we are trying to tell, or what we have to tell to our clients, is ultimately take action. Unless they take action and stop their postponement and start investing, nothing is going to be achieved. Otherwise, it's all planning without execution is actually, you are not going to yield anywhere. It's like you're sitting in a vehicle, you have filled the tank, you are ready to go with all the luggages in, but you forget to start the vehicle. That's how it's going to be. So now, how many of us like to do shopping when it's sale? Yes, no? Oh, no, yes. So very few people like to shop when it's sale. But trust me, the best part is when there is a sale and you want to buy a good product. That is the best part. Am I right or wrong? You're going to get the same product at half the price or 70%, 50% discount. Isn't it good as financial advisors when we get something at a discounted price? Okay, we'll leave this particular topic here and let's take it to the next thing. How does a SIP work? We will come back to that sale part a bit later. So if I forget, please remind me about that. So how does an SIP work? वॉइस नहीं आ रही है राकेश त्रिपाठी जी, बाकियों को आवाज आ रही है? राकेश जी आपको एक बार अपना चेक करना पड़ेगा सिस्टम, बिकॉज बाकी सबको आवाज आ रही है. So how does an SIP work? SIP is nothing simple but monthly investments which you invest over a period of time, on a monthly basis, on a daily basis, on a quarterly basis, on a half yearly basis, based on how the client wants, on a fortnightly, weekly basis. So this is what, so this is an illustration. SIP, it goes, a small amount goes into a pool, which is the mutual fund, and over a period of time, this creates wealth. And now, having said that, understand how does an SIP work? An SIP works because one can invest in smaller amounts. No worry about market timing because you're trying to rupee cost averaging what we are doing. So market upar hai, niche hai, we are buying. Now, can someone relate this to the sale which I was talking about? Again, we will come back to this later. But then understand this thing. Why does an SIP work? हम लोग सब बोलते हैं SIP काम करेगा, but why does an SIP work? Is it not just because of the fund manager or the fund we have chosen, the economy, but first and foremost, the basic point why an SIP work is only two reasons. One is disciplined investment. Am I right? And the second is the eighth wonder of world, which is the power of compounding. SIP works in wealth creation. This way of investing works only because the power of compounding, as we all know, as Albert Einstein has said, this is a wonderful tool. Having said that, can anyone answer, is this eighth wonder, is it only there? But the eighth wonder of world would not work if the ninth wonder is not in place. Can anyone say what is the ninth wonder? एक ने टाइम लिखा, सब टाइम लिख रहे हैं. Think beyond the box. Commitment to invest, that is discipline. Invested amount, that is second. The most important point is why an SIP works, which is the most important factor, is the client needs to have patience. Power of compounding works if the client has patience. Because अगर उसको पेशेंस नहीं रहेगा, वो पैसा मार्केट ऊपर नीचे जाएगा, निकाल देगा, तो he or she will never attain their what the goal is. So in short, I'll just tell you about the power of compounding. This is just an example. This is 13.6%, which the returns I have taken. This is as per industry standards, and this is the average of it. So when you start your journey, say with 2,000 rupees for a 30 years, you invest 7,20,000 rupees, and at the end of the tenure, you are making 1 crore of rupees. अगर आप 5 साल डिले करते हैं, मैंने वो कैलकुलेटर पहले भी बताया था, अगर आप वही इन्वेस्टमेंट 5 साल से डिले करते हैं, you invest 6 lakh rupees, but you lose out to 50% of the growth, which is you earn only 50 lakh rupees with the same 13.6% annualized return CAGR. But what here, if you see, एक जगह आपका investment is only 7,20,000 and the other place it is 6 lakhs. For 1,20,000 rupees, you're losing out on 50 lakhs. And the same thing, if you delay it by 10 years, it goes to 1/4. And so this is the power of compounding. This is the magic which helps you create wealth. Now, everyone would say, what is an ideal investment horizon? हम लोग सब बोलते हैं कि सर SIP करो, and there would be people who are, again, the sale point. Here, I'll mention about the sale. Every time the people who invest in SIP, the moment couple of investors, the moment market goes down, they get panicked. कि सर मेरा पैसा चला गया, एवरेज कम हो गया है, नेगेटिव हो गया है, 5 साल इन्वेस्ट किया, कुछ रिटर्न नहीं आया है. This is an industry analysis wherein this is the positive times return which you have achieved over a period of years. So this we can show it to our clients. and prospects and tell them why we talk about SIP in the long term, why we talk about compounding effect as the time grows, compounding effect comes in. And if you see, as per the stats, any investment which has been done more than 10 years and above in an SIP, 100% the returns have been there, which means the fund has generated or your investment has generated returns. And again, so what as an advisor is our role? हमारा इसमें क्या योगदान है? हम ना, we are only an intermediaries, we are advisors जो हम client को समझते हैं, उसकी profiling करते हैं, and where to invest. We help them define their goals in numbers and how to achieve that is the goal plan we give them. Having said that, we are not the manufacturers of the product, neither we are the people who run that product, who run that scheme, who run that particular asset class. So what as an advisor is our role? I think this has been repeatedly told also by my other colleagues and friends. We are here only and only to manage clients' behavior, investment behavior. So the behavior gap between the investment return and investor return is where we as advisors come into picture. And this is where we have to explain the client कि सर सेल लगी है, सेल के टाइम पे माल खरीदो और आप उसी पैसे में आपको ज्यादा यूनिट्स आएंगे और वो जब मार्केट बढ़ेगी आपको डबल बेनिफिट देंगे. I won't say double, but yes, it would give you more benefit. So at the end of the day, we are here to help the client reach his or her goal from start to finish. This is where the journey from where they started to the goal finishes, and it can be a short-term goal, long-term goal. This is where we come into picture, and how we take them through this journey is important, because unless we take them through this journey properly, we guide them, we are there with them, hand-holding them in terms of their behavior, the actions when an investor would make when the market is down or when the market is going negative. This is where our role is more important. Having said that, this is the industry data. We can always show this to our clients, the industry data, कि किस तरीके से पिछले 6-7 साल में how the industry has progressed. The industry has also progressed because of MFDs, the advisors who have also given knowledge about how to create wealth. So right from 4,335 crores till 14,276 crores per month, sorry. This is how the industry has grown. This is how the SIP, we are talking only about the SIP contribution into mutual funds. This is how it has grown. So this data shows how comfortable or how confident the people are in investing in the Indian markets. Again, I'm not touching base on the Indian story and all, but how the confidence building in different asset classes is happening. For example, when we were kids, and say a generation before us, the mode of transport was only very few mode of transports were there, or very few. Let us take an example of telephones. 50-70 years back, there used to be only one BSNL. So everyone had a choice, not a choice. If they wanted to take a phone, it was only and only BSNL. But today, when we go and buy a mobile, first and foremost, we can choose the variety of service which is available, be it Airtel, be it Vodafone, or be it any other company. Second, handsets. Handsets are the carriers. So similarly, for our investments, what is our goal? We can choose different asset classes, and this is what knowledge we have to give it to our clients. कि आज market में क्या available है? What is available in the market, and what they can do with their risk profiles, what they can choose with their risk profiles to achieve their goals. Having said that, there is a small video which I would like to run, how both the investor and the distributor should enjoy when the market is down, because that's a great opportunity for buying. So this is the sale point. So next is, how many of us like to eat a dessert after the meal? I can see a smiling face on DG's face. Mr. Ravi Kumar, I said, how many of us like to eat a dessert after a meal? Is this happy? Good? Yes, no? Not happy with the single scoop? Okay, sir, before the meal or after the meal, but would you like to have the dessert? Now, which excites? Double scoop of ice cream with all the other things on it? Yes or no? Which one do you like? So here, let us understand this. These are two concepts which we are talking about. So first, I'll take you through this. So how you can multiply your investment, how you can generate more wealth with very little efforts on in the investment. The formula is only one thing, which is step up SIP. You make an SIP amount, either a percentage or ad hoc amount every year, and how you can reach your gains. So let us take an example here. We have a wonderful tool on our VC dashboard, which is the Volatility Coaches, our SIP tool. So can everyone see on this? Great. So we're talking about our mutual fund SIP calculator. How does this work? So let's select a category. So as we are talking about, as we said, 10 years, we said that, okay, 10 years is an average where nothing is given negative return. So let me take a fund which is into, say, large and mid cap. Are everyone okay with this? And let's take a monthly investment and an SIP amount of 10,000 rupees. So I would not go much deep into it in terms of 5 plans, because here the concept is not comparison of plans, which that is another wonderful tool which we have on Volatility Coaches, our dashboard. But having said that, here what I'm trying to show is how an SIP can help in building the wealth over a period of years. So let me take an thing from 2010 to, okay, let's take a cycle where it went down as well. So I'll take it as 2007 to say 01012023. Okay, so let's see how this generates. What is the summary? So if you see here, and because this is a smaller screen, I think I'll just download it in PDF, or I can show you here itself. So the number of installments were 121, which is almost 10 years. So the investment is 12,10,000 at a CAGR of 16%. If you see, the SIP value is, as on today, is 28,29,000. Right? So the CAGR of 16%. Now, having said this, a simple, this is the best, one of the best tools, and here you can also compare it with other company funds if you want to give it to your clients. And why this fund, or that's again technical analysis, which one of the other group member is going to take up. So here you can always show the client, have the data readily in front of you, how the funds have performed and how it is done. So this is one part. Now we have another one, which I was talking about, SIP with an annual increase. Right? SIP with an annual increase. Let's take the same fund. Okay. Or any other fund we can take. We'll just go with the multi-cap fund, multi-asset or multi-cap fund. And we select the frequency as monthly, that's the SIP, and an amount of same 10,000. And we're taking an enhancement of 10%. So years, I'll just take again 10 years. Now, if you see, every month we are investing 10,000 rupees. And this, if you see for first 10 years, I think because the data would be too big, I'll just take a smaller data. So we're going with an increasing of 10% of our SIP amount every year. That is, first year we're going with 10,000 rupees. So this would calculate up till 2013, where I have shown 10,000 rupees. And from there on, it takes 10,500 rupees. And again, after that, 11,000 rupees, 11,500 rupees. So every time there is an increase in the investment. So if you see, I'll show you another slide where I've just done it. So I'll just show you an example of how with a step-up SIP of say 5% or 10% or 15% based on our client's requirement, how that can correlate or how that can give a fantastic return to the client over a period of time. So can you all see the screen? So this is again the same multi-cap. I've taken an SIP of 5,000 rupees monthly, which is from 2010 to 2023 last year. As of yesterday, I have done that. So if you see on a normal SIP, the first line, 8,05,000 has become 13,05,000. That is the growth amount. But having said that, with an annual increase of only 5%, your SIP investment amount is only 10,55,000. Your growth amount is 15.24 lakhs, which is an enhancement growth of 22.24%, wherein what you're increasing is only 5% of your contribution. Similarly, you have the calculations for 10, 15, and 20%. But if you just imagine if a client, and if you're able to convince a client that, okay, sir, your salary or your income is increasing 20% per annum, why don't you increase your SIP, say 10 or 20%? Just imagine with a growth of 20% in his or her portfolio of SIPs, say again, taking the same example of 5,000. So for a 18,06,000 rupees of investment, he or she is going to get an growth of 21 lakhs, which is almost an enhancement of 88% of his portfolio. Returns. I'm sorry. 88% of his returns increases with an increase of only 20% of contribution. I hope I'm clear in this. Did all understand? So friends, does it make sense? So with an increase of 5, 10, and 15%, the overall wealth creation is increasing multifold. And this is what is multiplying your investment. Multiplying client's investment not just gives happiness, as I told you, to an advisor, but also to the client. Now the other concept, STP, that is systematic transfer plan. It is nothing but it is also a similar way of SIP. But having said that, here we park the money, the fixed amount, whatever the client wants to invest, we park this money into a source scheme and then we put it into a target scheme. And typically it is either someone wants to get into investments on a daily basis, but they say that, okay, don't put it from my bank and all. And most of the HNI clients, they don't want to get into these kind of transactions on a daily basis. So what they would suggest, or they would recommend, or we should recommend is, okay, sir, you want to put 10 lakh rupees into the market, but as the markets are going up and down, volatility is there definitely. So let us put it spread over a 3-month or a 6-month period. And generally, most of the HNIs invest in a 10-week theory. 10-week theory is basically approximately around 3.5, 4 months, because there is always 2 quarters which coincide in 10 weeks. And that is where you will see a market fluctuation. You can take the history of the market and you would see a fluctuation between one period to the other period. So someone who says that, okay, I have a lump sum money, and why should we as advisors, when we are advising them, should lose on to the wallet of the client maximum wallet of the client. So we can take this money, put it into a liquid fund and or a money market fund, and then transfer it on a daily basis, weekly basis, anything which we want into a target scheme. So let me show you an example of this as well through our VC board. So this is the another wonderful tool, the magical tool which we have on our VC board, on our VC website, that is about the STP. So now with an STP, let's take an example again, ICICI. So let's take the scheme as a liquid scheme, basically. So let's take it as a liquid fund, and again, we'll choose any of the equity funds. Say this one. So let's select the investment one time, because when we are talking about investment, it is only one time. Having said that, because the client is going to invest only one time into this, so we can say, just for an example, I'm taking this daily investment. Say a client has invested ₹1 lakh and the STP transfer amount is 100 rupees. Or let's take this 10 lakhs and this take this as 1,000 rupees and select, let's say we started on 5th. And the initial investment amount is 112010, and the STP date. So let's do this calculation. So here, one of the biggest benefit a client would also get in terms of investment is transfer. Oh, sorry, my mistake. So one of the benefit with the client would get is, yes, the money which is lying in liquid fund also generates an a return which is there by keeping in the liquid fund. Like currently the liquid funds are giving anywhere between 5.5% to 6.5%. The client generates money on that as well. And also he's participating in the market on a daily basis. Many clients want to participate on a daily basis and see that, okay, because as the markets are going up and down on a daily basis, they would like to engage their investment in that way. So if you see here, this is all about an investment of 10 lakh rupees and the total STP over a period of time, though we have given the STP date as that, and after that the money is still growing. If you see till date, in say about 13 years, the money has grown to 44 lakhs, a profit of 34 lakhs with a return of almost 11.75%. Wherein in that time, the time which we have chosen, the returns from liquid funds are around 7.75, and the returns from the equity fund where we have transferred is around 12.57% returns. So this is the better part of an STP, where a person who has lump sum amount wants to invest that, and we can do it on a weekly, daily basis. If you see here the options, daily, weekly, fortnightly, quarterly, and monthly, these options are available. So we can, based on the discussion with the client, we can always invest the money. And this is another option where we try to average the market. Any which ways we cannot time, no one can time the market, but we are trying to average and buy units and invest money at regular intervals. I hope till here it's clear. Is it clear, friends, about the SIP, STP, and SIP with an increase in the amount? So having said that, now what our markets have given returns? So just to understand that, give me a minute. So this is a market analysis, a sort of between different asset classes, how they have performed in the past 37 years, right from 1980 till 2020, how the markets have performed, the fixed deposit, how it has performed post-tax 12.89%, gold over the same period of time 25.6%, and stocks, that is the stock market, how they have performed. It is 221, it is 1 rupee invested, so 221% returns if someone would have invested, 22.1% returns if someone would have invested in different asset classes. Having said that, we are not saying that only equity or only mutual funds is the category as an asset class, but having said that, asset allocation is the key. So you have to invest in all different assets, because over a period of time, assets, well, different asset classes have different phenomena, different behavior, and that is where it will give you returns. At times, debt would give you returns, equity would give you returns, and other asset classes also give you returns. So last 10 years of spectrum, which is last 10 years, this is as on April, which I have collated the data. So as of last 10 years, this is the average return, maximum and minimum returns in every different category of mutual funds, wherein we have also captured the ups and downs, the lows, highs of even our COVID times, and also the sharp rises and sharp declines in, say, our Ukraine war or any other thing which is geopolitical situations which have done. So if you see, none of the category gave, of course, the minimum thing was equity flexi cap 9.57%. Leaving that, the minimum return is also not less than 10%, which means your money, the client's money, would grow at a much decent level when you invest over a period of time. Again, when we're talking about last 10 years, this also is a case of helping our clients and spreading knowledge on SIPs and STPs. Now, this is something as a monthly rolling return data, which is from April 5th to March 23, April 05, April 2005. So how the different indices on an average has performed. And if you see over a period of time, the positive return in mid cap or even in small cap or Nifty as per se has been 100% over a period of time. So this is why I'm showing you this, the myth of people that, okay, mutual funds are not good, equity will not give return. Trust me, in the previous slide also, I have shown you that equity as an asset class, when invested over a period of time, can give you one of the best returns any asset class gives. So this proves time and again that first, discipline, power of compounding works, and long-term SIPs and STPs, of course, work in a fantastic way. So to end my presentation, we have all seen this, but just for the benefit of everyone, being an ace investor, we all know him. I'll not name him. We all know our ace investor. So just I'll end my presentation with his song.
सिप सिप करके मैं इतनी ये पूंजी जुटाई.
I hope everyone can hear the music.
पूंजी तो हर मेरी खुशहाली छाई, खुशियाँ साथ आई तो चेंज हुआ मेरा पूरा जीवन. ऐसा अब ना करूं.
So thank you, guys. Thank you, Kanakji, for the opportunity. And I think I have tried to put it in the most simplest ways without using any jargons of investment. So if there are any questions, let's take it up.
Beautifully explained, Opinder. I'm sure anything and everything about whatever he has been sharing, please, it will be good if we all can ask few questions. And you can unmute yourself and ask. Then maybe we will share. Yes, boom. If you have liked the session, please do write boom in the chat box. That's how we say thank you to our speaker. Boom, boom, boom. Yes. If you would like to know a little more about what other games and other things we have, we will be sharing a little bit on maybe 2-3 minutes on that also.
Yes, sir. So someone has asked me about brief more about STP. Sir, STP is nothing but systematic transfer plan. Instead of money going from your bank account, your as in client's bank account, what we are trying to do is many clients are there. They do not want to get into, that, okay, every day the money should go from my account, my savings account or my current account, and they get a lump sum amount. So what generally, there is a tendency, it's a human tendency, when the money is lying idle in your account, you get for many impulsive purchases, or you get into, you can spend. So this STP is another way where you can take that money from the client, invest that money into a liquid fund or a money market fund. Based on the yields on that day, there are some technical parts of it, which my other colleagues would definitely explain in the course of our journey. So you can take that money and just route it to a targeted fund, which can be a mid cap fund, large cap fund, small cap fund, hybrid fund, based on the client's risk taking profile and the goal. See, the most important point is, what is the goal of the client? What is the risk taking capacity of the client? And third most important, what is the tenure to reach that goal? If a client, for example, says, okay, this is just an example, neither I'm talking about disclaimer, it's a disclaimer that I'm promoting anything. But having said that, say, suppose a client says, I don't want this money for only 2 or 2.5 years, but I have this corpus of 1 crore, which I want to make some good money out of it, or make some, decent returns than keeping it in a fixed deposit, for example. So you can invest in an asset allocator fund, which is giving around 8.5%, a balanced advantage fund. But again, the client, because of the information today they have all about equity and, markets. See, again, as one of my other friend, Mr. Rahul Chandalia has told that, okay, what information he has and what information we have is the same. The stock market which he is watching and you are watching, we all have the same information. Having said that, what are we doing here? As I mentioned in my slides previously, the behavior gap. We are just trying to understand and make client comfortable that, okay, when you are talking about 2 years or 3 years, let's put that. So in an asset allocator fund or a balanced category fund or a hybrid, conservative hybrid fund, you get a decent return of 8%, approximately 7 to 8%. And again, taxation benefits are also there. So that is where STP comes into a play. I hope I've answered that particular point, sir. If there's anything, do let me know.
Sir, in STP also there is taxation, right?
सर यस, एसटीपी लिक्विड में जब लिक्विड से जाता है दारूवाला जी, लिक्विड का जो वो बेसिक आपका डेट का टैक्सेशन है वो लगेगा. हैविंग सेड दैट, अगर इक्विटी फंड में जा रहा है 1 साल बाद 365 डेज बाद, दैट इक्विटी टैक्सेशन कैलकुलेट्स देयर. क्योंकि आप अगर पैसा हर महीने हर दिन डाल रहे हैं, तो देयर इज ऑलवेज, एज यू नो, it is again a sale from STP, the liquid fund, or the money market category fund, to an equity fund. So sale and purchase happens. So on sale, capital and profit comes. So when we are talking about profit, taxation is always there, sir.
Sir, ये work कैसे करता है?
Sorry sir, I think I have not understood the question. Work कैसे करता है मतलब?
मतलब SIP फंक्शन कैसे करता है? जैसे नॉर्मली SIP होता है, SIP होता है कि हर एक पर्टिकुलर डेट पे हमारा अमाउंट इन्वेस्ट होता है, और उस डेट की जो NAV होती है वो हमें मिल जाती है या क्लाइंट को मिल जाती है. तो ये SIP का होता है कि एक फिक्स्ड डेट को वो लमसम होता है कि हम कभी भी एक लमसम अमाउंट इन्वेस्ट कर देते हैं. तो STP कैसे काम करता है सर?
गुड क्वेश्चन सर. अभी मैं आपको 1 मिनट एक स्क्रीन दिखा रहा हूं, जो हमारा VC बोर्ड का स्क्रीन है. 1 मिनट सर. ये स्क्रीन दिख रहा है आलोक जी आपको? आलोक कुमार जी, यू कैन सी द स्क्रीन विच आई एम शोइंग यू, राइट?
यस सर, स्क्रीन दिख रही है.
अब ये देखिए, 5/10 को हमने खरीदा, NAV था 134.79. ठीक है, ये हमने लिक्विड फंड में खरीदा. अब ये पैसा जो है एवरी डे 6, 7, 8 को ये लिक्विड फंड से बिक रहा है। तो आपको ये दिख रहा है एनएवी बढ़ता हुआ जा रहा है लिक्विड फंड में, एज यू नो मार्क टू मार्केट वो सब कॉन्सेप्ट छोड़ दीजिए, बट लिक्विड फंड में पैसा बढ़ रहा है तो वो दिख रहा है ना आपको?
यस सर, यस सर।
राइट, परफेक्ट। लेट्स गो डाउन। This is the sale of liquid fund which we are doing on a daily basis. अगर आप डेट्स देखें 16, 17, 18 डेली बेसिस पे हम बेच रहे हैं लिक्विड फंड को, और हम नीचे जा रहे हैं, मतलब हम इन्वेस्ट कर रहे हैं इक्विटी फंड में। लेट मी जस्ट कम टू दैट सर, 1 मिनट। जैसे एसआईपी हम डेली बेसिस पे खरीदते हैं ऑन अ पर्टिकुलर डेट, इधर हमने जैसे डेली डाला था तो आपने उधर देखा कि उधर हमने एक पैसा बेचा। इधर देखिए 6 तारीख को इट इज कमिंग अगेन, 6, 7, 8, 9, 10। So on a daily basis, in a way, just to explain you in layman's language, it is a daily SIP. Instead of it is going आपके बैंक अकाउंट से ना जाके वो आपके म्यूचुअल फंड के लिक्विड अकाउंट से जा रहा है।
Okay, sir. I got it.
Clear, sir?
Yes, sir. Thank you very much, sir.
सर इसमें रिटर्न ज्यादा होगा कि आपने जो
Sir, explain about stealth deal.
Sorry, Ravi Kumar ji, I couldn't understand. Your voice was breaking.
Okay, no issue. Good evening, sir. Please explain about the stealth deal.
The
Stealth deal.
Sales?
Deal, sir.
Can you just type it, sir?
Stealth deal, sir. Yeah, you mentioned, na? Yeah, remind me about the sales, sir.
Oh, sales. Okay. Sir, okay. Got it. About the sales. Got it, sir. 1 minute, sir. I'll just show you. I think this is self-explanatory, but still, I will just show you once again, sir, about the sales. Are you able to see my screen, sir?
Yes, sir.
So sales is when the market crashes. Do you see how this guy is, the little champ is dancing?
Yes, sir.
This is how happy we should be, and we should tell our investor this is how happy he or she should be when there is a market, a correction in the market, because that is the sale. You are getting good companies at a decent price. That's a sale. Am I right?
Okay. Yes, sir.
This is what I meant. Do you like the sale? Because when you like sale, when you do shopping, when you do go for shopping, you're buying clothes or groceries or anything, we generally tend to buy more when we go for a sale, right? Your budget would be 10,000 rupees. This is a human tendency, and you can check it on yourself. This is a human tendency. When you have 10,000, you budget ki aaj mujhe 10,000 rupees you want to buy. But when there is a sale and you are getting an item which is say 2,000 rupees on that particular day, if you are getting it for 500, you will say, okay, my budget is 10,000. Let me go overboard a bit by 500 rupees. It doesn't hurt me. But then the same thing should happen in stock markets or in mutual fund investments. When you know this is a good company and you are able to, get it at a better price. Again, as I've shown you in another slide of mine, in 10 years, there was nothing negative. Period 10 years. Can you see this slide, sir? And the worst return is 9.57%. Say, I'll take it as 10%. So if you put your investment at the right place, you are going to make wealth. And that is what we are here to make wealth for our clients. That's our main goal.
Okay, sir.
Right, sir?
Okay, sir.
Yes, sir.
Sir,
So,
actually, one more thing. Can you share that Excel sheet that you mentioned, cost of delay, and that was financial planning tool, Excel sheet?
yes, sir. This is our Excel sheet, sir. This is, of course, created by me. This is my the personal thing which we use. But, sir, by any chance, are you a volatility coach or a FFF member?
Yes, sir.
Just go to our screen board, sir. There also all of these things are there. This we have customized it, which of course you connect with me. I'll share it with you. So here what we have done is we have simulated this thing. So on a every month delay, if I delay my goals by 1 month, my investment, sorry, by 1 month, how is it going to affect my return, my goal amount over a period of such years? So for example, if you see the property part, I have just put as 10,000, oh, sorry, 10 lakh rupees for 3 years. 1 month delay is only making me reducing my goal by 1785 rupees. Having said that, if you go down, a house in 5 years, 2 crores, if I delay my investment of 3,17,977 for 1 month, my corpus reduces by this amount. So this is the power of compounding, which I was talking about in my rest of the slides.
Okay, sir. Thank you.
And sir, please go and check on, as you are an FFF member, I'm sure you have access to all the volatility calculators. And trust me, sir, that's one of the best things you can do to yourself. We need to upgrade ourselves. Unless we learn, we are not going to tell, we cannot tell our clients what to do. And just for an example, I'll just take you here. So this is our volatility thing. I mean, the website. Just log in, and FFF members can log in. So of course I've put pre-filled it in because I use it on a daily basis. So you have all these calculators, your 1 page financial planner. You have all the recordings of our master classes which happen, the conference which happens, and this is the wonderful tool. This is the magic creator, which is the volatility calculators. And from here on, I was showing you all of these things.
Okay, sir.
I think Mr. Vikram has raised his hand. Vikramji?
Yeah, Opinder ji, so you gave this example of someone having 10 lakh and there was an STP from liquid to SIP into equity. So my question to you was, if somebody has that kind of a money, say 10 lakh once a year, will this be beneficial, or simply investing one time into equity, will that be beneficial?
It is all to do with the psychology. That's what I mentioned, that we are here not to see, again, the information which is there with him or you is same. Yes,
Yeah.
you are, we as this is our profession, we have a little more advantage in knowledge. Having said that, it all depends on the behavior gap. If he is a customer or a client who says that, okay, I am investing this money for 10 years or 15 years, you can put a lump sum amount also. Having said that, because of the over excess of information, people tend to ask, kal market gir gaya to kya karunga? 4 दिन बाद market gir gaya to kya karunga? He will sit in a club and that day evening he'll have a cup of tea with his friends and someone would say, "Boss, my advisor told me market is going to crash in next 2 months." Right?
So you're suggesting if he's a risk averse, then we need to go for STP.
Absolutely, sir. And that's why I was mentioning asset allocation. The whole point is asset allocation. Say, suppose you have 100 rupees to invest. You cannot invest all 100 rupees into land, all 100 rupees into gold, all 100 rupees into mutual funds, or all 100 rupees into direct stocks. So your expertise is important and asset allocation is important.
So do these calculators also have something where we can measure the risk profile of the investor?
Sir, that is where you have in the calculators, we have something called as, goal planners. Goal planners will give you a sort of a thing where and what a client should be, one page or goal planner. You can always sit with him, have a, his answer the following questions. If you see, just sit with him, just 5-10 questions, and you will come to know how a client's behavior is towards investments. Because someone would say, I am aggressive, sir. मैं बहुत aggressive हूँ. But when he answers these questions, you will also understand that what kind of portfolio you need to give it to this client.
Right. Got it.
Right.
Thank you.
Yes, sir. Anything else, friends, if I can answer? So last but not the least, we have some more sessions coming up in the due course of time this week. I'll just share those also with you. And next is, yes, friends, we are having, this is for open for all. Again, the details will be shared and you can get in touch with Mr. Nishant. and he's going to send a link, a Google Sheet in the chat message where you can fill in your details. Nishant, I request you to just send that Google link in the chat box. So friends, we are going to have a conference in Mumbai on 30th September to 2nd of October. This is our FFF Financial Fraternity Conference, which happens every year. And that's a fantastic speakers lined up. So I think everyone should look at joining it, seeing it, and unless you see it, you are not going to, the experience is different. You meet industry experts and many good speakers come up there. And these are some of the games which are being shown. These are some of the games which we already have and which we are going to launch there. And these are all games for engagement with clients, and not just clients. Even when you play this, you understand how the markets act or react, which makes you much more better in terms of dealing with the client and also your own investments. And we have VG creatives, which you can share it on your own names, with your own names to your clients. So again, I would request everyone to look at joining the conference or attending the conference. That would give a more insight information about the industry, latest changes in the industry, what are the new products coming up in the industry. So it makes you more equipped for the industry, rather, in a nutshell. So over to you, Kanakji.
Thank you so much, Upinder. It was really nice session, and I'm sure each one of us have actually learned something today. To just continue what Upinder has already shared, just talking maybe for one minute or so about the conference. Like, this was the last year's conference where we have all our industry veterans and some of the very unique speakers were there. And maybe I can just share, not sharing the details of the last year's, but this year, this is what is going to be. It's only a 45-second video. Just have a look at it.
Fourth FFF conference in association with the Economic Times will take place from 30th Sept 2023 to October 2nd, 2023 at JW Marriott Sahar, Mumbai. Filled with learning through games, networking opportunities, and top-class speakers from asset management companies of India. A gala musical evening with celebrities to reward and recognize the hard work of MFDs based on AUM. The conference will also have India's largest FinExpo with over 50 presenters and product displays. The conference and expo will provide excellent opportunities for learning, networking, and celebrating the hard work of MFDs and financial planners. The event will take place at one of the most premium properties of JW Marriott in India. Attendees will learn how to 10x by elimination, automation, and delegation, which will help them streamline their business and boost their productivity. Register now for the most elite mutual fund distributor conference in India and take your business to the next level. Fourth F.
That's about the conference. If you really want to connect with family businesses who manages 500, 1,000 crores, I think Dr. Parimal Merchant is going to be one solution, one answer for all of you at the conference. He is going to stay with us for all the 3 days. And then if you want to create a value for your own company, which is your distribution company, then I think Mr. Kumar, he has actually sold a 51% of his stake at 540 crores. So I think this is going to be another opportunity to be with him and learn from him. And yes, how to take your brand and make it as a global brand. So if you want to know more about this, this is one of the 7 sisters. Okay, she is going to tell us how she has done that. Friends, yes, there is a registration fees for this for people who are attending, and we have 152 seats left right now, 52 or 53 seats. And for now, for next few days, the rates are little less. Probably it will go up in a little while. So 32,000, including GST. This will become 32,000 plus GST. This is the barcode. You can just scan and you can reach out and know all the details. One more good advantage, you will become you will get a complimentary FFF Pro membership for the whole year. The cost is usually 15,000 rupees, but it will be coming to you free of cost if you are a part of this conference for this year. So you will get not only the calculators, which Upinder was telling, analysis software, analysis backend for mutual fund and all, master classes, and how you can make actually one-page financial plans from all the softwares, and equity analysis also. And these are the classes which we'll be having in the coming year. So with this, thank you, friends. Please be in touch. Any of our volatility coach, we will, I think there is one new member who has joined our family, Manobrita Banerjee. So welcome Manobrito Da from Kolkata to the volatility coach family. Welcome Manobrito Da. If you are there, you can switch on your camera. Yeah, the rest of us are there. So we are also in process of preparing Beyond Classroom season 15. That's also going to be an amazing one. The theme of the next thing is for how to renew RVCC certification. Okay, that's a good. It is not so important. I think NSC has not put a very big compulsion on that. So as long as you are RVCC certified, continue to use that. Otherwise,
can I stop the recording?
Yeah. Okay.